Hello, hello, everyone. How are you doing? Happy Thursday. Richard Amiri Moido here with Investor Next Door Club. We are very happy to have you on with us today.
I know a lot of people are still jumping on and grabbing lunch. So this is your lunch hour. Grab lunch. We're going to have a great power-packed hour, hour and a half. Tell us where you are coming from so we can say hello. You just drop it in the chat box so we get an idea of where everyone is from. So hold on a second.
So tell us where you're coming from. Drop it in the chat box. If there's anyone you would like to invite last minute to come on to hear about this free session, then you're more than welcome to do that. And so we got Mansfield in the house. We got Little Elm. That's our neighbor right there.
Yeah, Andy and Jane Weaver from Rio Rancho, New Mexico.
Awesome.
Welcome from Murphy. Uh, the Big O, that's
Odessa.
Odessa, Odessa, Texas. We got someone from Allen, Texas. Texas is definitely in the house. Welcome, you guys. We're going to get started in just probably 30 seconds in the interest of time and to respect your time.
Absolutely.
We're excited to share with you what we've been working on and why we're excited about commercial real estate investing and really investing in general because of what is happening in the marketplace and why we want to help other people get ahead.
Absolutely. There's just so much potential that's going on right now. We're going to break it down for you in some bite-sized chunks. Some of this could be a little bit getting a drink from a fire hydrant. We tried to bring it down. We were bringing 20 years experience on our side, another 15 to 20 years experience on the other side. I mean, we've literally, between our entire team, we've got well over 100 years of experience in the space. And we really want to make sure that people know that there's opportunity that's within their reach, inside their grasp. And hopefully today just kind of gives you a little bit of taste of it.
Yeah, and the whole purpose of this really is to help shorten your learning curve.
Yeah.
This is an area and an industry where you really want to get involved in. Our job is to bring collective knowledge with our incredible community and share with you so that you can shorten the learning curve. I remember this past weekend we were working with a friend of ours who is just brilliant with AI, and I'm like deer in the headlights, like I don't understand this stuff. He said, listen, I have poured over this hours and hours and hours, learned all the things not to do, trial and error. And because of my experience now, you can learn from me and really shorten the learning curve for you guys. And you guys can be up and running in a day and a half. I'm like, okay. But it's because we're leaning on his knowledge, his wisdom, his experience, his trial and error, so that we don't have to go and make the same mistakes and readjust. He can literally show us the way. Have you ever, Richard and I love hiking, and there's some areas that we've never hiked before. So we usually will put the more experienced hiker in front so they can see where to step.
Yeah.
And so when you go with someone who's experienced and you step where they've stepped, you don't have to worry about where there's like rocky ground or a loose rock that you could slip on or something wet. And so that's really what we're here to do, is help you with where you should step next.
Yep. And just a little bit about our background. I've been a lifelong entrepreneur since I was 18 years old. So 55 now. So that's 35 some odd years, somewhere in that range. It's hard to, I know, I'm working on it. I started off in the school of hard knocks. I dropped out of high school early and started a business by the time I was 18. And I ran that first company for over 17 years. It was a landscape construction company. It actually bought the house we still live in today. But I let that business morph us into other types of ventures. So I kind of started leaning in more on the investor side. But then we got into the mortgage industry, and I fell in love with the finance side. And then I got into private lending, and I started helping dozens of real estate investors access their properties quicker, because banks take a long time sometimes to get deals done. And no one's ever accused a bank of getting a deal done fast. But private money can move pretty quick, right? And then you can move into something else that's more permanent, more stable. And then I got into creating funds, creating fund structures that would be as just as competitive as some fund structure that they would create on Wall Street. And I did all of this from just like having an idea and then seeking out experienced people, professional people that I could learn from. And what I wanted to do when we opened up Investor Next Door Club is I wanted to create a platform where people from all walks of life could start from absolute scratch. Think of myself 20 some odd years ago, just putting my first foot onto the path. It's like, what would I have needed as if I wanted to get into a community? What would I have needed to get started? What would I need for a mentor or a coach or something like that? And this is how we tried to build this, was really thinking of the new person. The experienced person is going to, find great value here as well, and networking. But we built what we wished we had over 20 years ago when we entered the space, because our goal is to shorten the learning curve for anyone who has a desire to understand real estate investing and moving in that direction for their life.
Yeah, absolutely. So are we going to introduce everybody now?
We are.
Okay. So we have some people with us that you're going to hear from throughout the time that we're here together. And really, we couldn't do it without them. I mean, it takes a community, and that's where we're creating is this incredible community. So this first person that I want to bring on is somebody who we have absolutely love working with. And he is somebody that has been in the real estate investing community for a long while. He comes with a incredible resume in corporate America. He's part of our training and advising staff. Our very dear friend Marty Kennard. Welcome,
Hey,
Marty.
everybody.
Give
How
us a
are you?
little bit of background on you.
All right, my background. So I spent 21 plus years in corporate America, 17 with Target. Most people knew me as the Target guy. Youngest store manager in the company at 26, youngest district manager in the company at 28. Took an early retirement at 40. And at 40, I took a lot of my retirement funds and started buying real estate, which is part of the reason why I'm here. So about 15, 16 years into real estate. I've done some single families, duplexes, VRBO, some ranch land, and apartments. So I'm all over the board, lots of learning, both from the book and from the hard knocks, but very happy to be here.
And currently, right now, where you're at is now you have the largest sand volleyball facility
And I own a sand volleyball bar and grill here in DFW. It's the largest sand volleyball bar and grill complex in America with 24 sand courts.
in America. That means coast to coast.
And it
Yes,
is
and
quite the
I'm
vicinity.
actually coming from my event studio, so you've been here before.
That's incredible.
Yeah, it's always funny when Marty tells us at 9 o'clock in the morning he's heading to the bar. I'm like, man, it's a little early. So you're going to hear more from Marty in just a little bit. He's going to be talking about the multifamily aspect when we get to that portion. So thanks for jumping on, Marty. And then another couple that we have just recently met, and they've just been super incredible. We've loved working with them. They are a wealth of information, and they are just fun, good people.
They
So
are.
Catherine and Tony Bass, share a little bit about you guys and what you do.
Hey guys, thanks for having us here. Super excited to meet Mary and Richard. A little bit of background from us. Anthony and I are retired. We retired back in 2013. So all this space is kind of new to us, but yeah.
And what's kind of interesting is we don't have a background in this space. We have a huge background in taxes because we did that kind of on the side when we did our careers air traffic controllers. The cool part is we learned quite a bit about savings and tax dollars. You'll hear a little bit about that here pretty soon, but we are super happy to be here, super happy to learn from this team, and we've already learned quite a bit. So thank you all for
Thanks for
having us.
having us.
Yeah,
You
you're
bet.
going to hear from them in detail in a little bit, sharing about their tax knowledge, because for us, you can learn all about investing. And if you don't understand how finances work, if you don't understand tax and entry formation and how to leverage the tax system, if you don't understand how to run a business, if you don't understand how to raise capital, you're going to have a gap in knowledge, and you're not going to be able to have the kind of business that will flourish. So we want to provide you with all those things. And then, so how this is going to work out today is it's interactive. So I know you guys aren't necessarily on screen, but you are in the chat. So if you've got questions, drop it in the chat. We want to hear what's landing. If something's like, wow, that was an epiphany, put it in the chat. We want to hear about it.
And if we say an acronym and we didn't tell you what the acronym means, then by all means, tell him.
acronym police because I'm probably a newbie in the multifamily real estate realm. And so there's times where Marty or Richard will drop these acronyms. I'm like, time out. What does that mean to us mortals? And so help us out. So drop a note in the chat and let us communicate so that we can really all grow together.
Absolutely. And so this first concept that we want to introduce you, and some of you, if you've ever heard of Robert Kiyosaki, the first time I was exposed to this concept, I was about 26 years old, and I was on a plane, and I just had this epiphany. I had the row all to myself, and I was thinking to myself, oh my gosh, I've had this wrong for so long. I had such a misconception, and I'm really going to let Marty dive into the four quadrants, because when you start thinking like an investor, your world shifts. And one of the things that we did with Investor Nextdoor Club is really we wanted to build a roadmap for people to get in the game, right? No matter what their knowledge or experience level is right now today, they can get into the game. So Marty, I'm gonna let you chime on in here on the four quadrants, because I know this is a passion of yours.
Yeah, if you guys have read Robert Kiyosaki, Rich Dad, Poor Dad, this quadrant is going to be old hat. Hopefully, we can share a few new things. If you haven't read it before, read it. I always tell people you got the Bible, then Rich Dad, Poor Dad. It's number 2. It's that important. But this is foundational. This is key to understanding how not only how money works, but really how the world works. So you've got 4 quadrants on the screen. I'm going to look between the left and the right. So the left is people trading their time for money. The people on the right, they have systems, processes, and money working for them. Most of us are born into being employees. You know, we earn either a salary, we just trade time for money. S, self-employed would be like a specialist, doctor, lawyer. They might make good money, but they're still only making money from their time and their services. Now, in the upper right, it changes. A business owner, it's not necessarily just their time, but they have people, they have systems, they have processes working for them. They might go on vacation for 3 months and come back, and their people and their systems are still making money for them. My favorite quadrant is on the lower right, investor. So investors, if you're good, you have your money working for you. If you're really good, you have other people's money working for you, and we'll speak to that when it comes to leverage. The one thing I like to take away from this is that the people on the left, especially the employees, they work the hardest, the most. They make the least, and they typically pay the most in taxes. Now, the investors and a little bit of business owners, they make the most, they can work the least, and when done right, they pay next to nothing in taxes. There's nothing wrong with being on the left, guys. In fact, that's where a lot of us start. But knowing how beneficial it is on the right, especially the lower right, you want to understand, well, how do they do it? What do they do to get there? And can you siphon some of your funds from your trading of time into things that are money-making assets? So again, it's just an excerpt from Rich Dad, Poor Dad. I don't know if there's anything else you want to add in there.
Yeah, so this was the epiphany I had, because I thought I was a business owner for years. I had 30 some odd employees, hundreds of thousands of dollars in equipment, multiple millions of dollars a year in revenue. And I'm thinking I'm a business owner. And then I get confronted with, well, how's your money working for you? It's like, no, I kept putting my money back in my business to grow the business. Sounds like a good idea, but nothing was working while I was sleeping. And then the other part about that is it asked a question about how long can you step away from your business? I'm like, I could barely step away for 3 days. And so I was like, oh my gosh, I am self-employed. And so it wasn't like I beat myself up about that, but it was good to kind of figure out this is my starting point. I'm starting from self-employed. Now I want to move to where I can put systems in place to where I can be a business owner, but I want to start taking some of that earned income and start moving it into the investor quadrant. So that was my reality check. For other people, it's different, right? Again, nothing wrong with the left side, like Marty spoke to, because we know tons of people that make great money at a W-2 or self-employed, but they're putting their money to work outside of the stock market, outside of their 401ks, and they're putting that into something that's going to grow over time and create cash flow. One of the things that we like to teach and talk about is as an investor, when you're buying something that's existing, that has revenue, already has cash flow, you're basically buying. You're not investing into cash flow. You are buying existing cash flow that you're going to be able to come up with ways to either minimize your taxes, increase your existing earnings and cash flow, but more importantly, building equity for the future. So that's part of the mindset of why we bring this up here, because it's such a foreign concept for so many people, but also why it's so foreign is because people think they have to wait till they have a whole lot more money or a whole lot more knowledge, and that's just not true.
Yeah, let me expand a little bit on that concept of cash flow. I think a lot of people hear it, but they don't really understand how that works. Cash flow is where money's flowing to you without you necessarily having to work for it. So when we're talking about investing or real estate investing in this instance, there's going to be some aspects of it where you're self-employed, you're working, you're building something, but you're building something with an intent to build some systems, that those systems create you cash flow that you don't have to work on. So there's an aspect of this journey where you're going to flow through all these different quadrants. And so just know that it's not like I have to move from one quadrant to the next. Sometimes it's just overlapping. And I already know, I think some of you are thinking, oh, Marty got into all this real estate investing because he had a big old retirement plan and he started when he was 40. I don't have that. Listen, you don't have to have that. So we're going to teach you all sorts of ways that you can get into the investing game no matter where you are right now. Marty has something he wants to say.
You
Go ahead,
can probably tell. The one thing I'd like to say is how you spend your money will tell you where you're going to end up. So if you're an employee and you save some money and you buy a car, that's an expense. But if you use that same money and buy a car that's a limo, you turn it into a business, suddenly you're making money because you have this business, you can write everything off. And I do want to give a shout out to Veronica on here. She said that she's been working intentionally a lot this year. So congratulations. Welcome to the club.
That's awesome. Yeah, I mean, listen, when you start thinking like an investor, when you go to let money leave your hands, you really run the filter of, is this an expense or is this an investment into an asset, right? Am I buying something that's going to rust and rot, or am I going to buy something that's going to produce cash flow and potentially grow in value over time? And unfortunately, a lot of people in our society and the world we live in today, there's a lot of people chasing a lot of looks and feels, and it will have a very long negative effect as the decades roll on. So what we want you to take on and really consider here is, we talk a lot about commercial real estate. We are not against residential. I've done 60, 70 some odd fix and flips through both of my funds and residential wise. But one of the things that I noticed with commercial real estate that I did not get into because I did not understand the true value that got created. Like the exponential growth you can have with commercial real estate against residential there's absolutely zero comparison. And risk is no greater in commercial than in residential. It all starts with knowledge, it all starts with due diligence, and then buying right and managing that right. But the wealthy people around the world, 68% of all wealth is held inside of real estate. They park their capital there. They're not going to stick it in a bank account. They're going to put it in something where it's going to preserve capital, create cash flow, tax deductions. It's going to increase their equity. And more importantly, they're going to find ways to utilize that real estate to create tax advantages that otherwise are not available any other way. And that's the thing about when you start thinking like an investor or a real estate investor, is you are unlocking parts of the IRS code that you don't have access to right now, either from knowledge or because of activities you're not involved in. And we want you to start opening up what's available to you because it's already been written for you. Just no one's really telling you where to go find it.
Yeah, and I just want you to, we're not going to get a lot into the mindset of being an investor. That's something that we do teach in our community. But I want you to get inside of the only thing missing is a knowledge gap. And so just think wherever you are versus where you want to be, the only thing missing is just a knowledge gap.
And so most people never invest or own real estate they live next to for a couple main reasons. They think it's too complex, there's too much money required, and they don't know how to find good deals. Like they think that there's this inside club, and yeah, there's inside communities that have more of a pulse on what's going on in the market, more resources. But what you'll find is when you enter into those communities, you'll find that people open up their arms and they open up their brains and they will share with you because people want to see people win. And five big benefits really focusing on multifamily investing. And this is very applicable to other types of commercial property, such as storage facilities, RV parks, right? These things have a lot of things that translate into other asset classes, as we refer to it, property types. One is big reason, cash flow, right? People want extra cash flow. The other is appreciation. Property values go up. We are not printing more land, okay? And when you look at multifamily, it is entry-level housing or traditional or transitional housing. And it's always in demand. Now, a lot of times you could be driving around, you see like all these big, fancy new construction for maybe multifamily or apartment complexes. And that is a fraction of the actual multifamily industry as a whole. Most people live in property types that are lesser expensive, right? And we do have an affordable housing crisis, entry-level housing crisis in this country, and it is in peak demand right now. But we're gonna let you in on a little insight of why there's such a window. Why are we pushing this forward right now? Because if you blink, you just may miss what's going to happen over the next 24 to 36 months. And then the other thing is tax benefits, the leverage that comes from it. Maybe you've heard this, maybe you haven't. When an investor refinances and gets cash out of a property, they don't pay tax on that cash. They only pay tax on the cash that may go to their personal bank account. But they could take that cash, let's say they took out $250,000 from that property. They could go put that in another property, and that property starts creating cash flow for them and more tax advantages, and they never paid a lick of tax on that. That is part of what we want people to understand and learn, how you can start really compounding over a reasonably short period of time, because now you understand how leverage really works in your favor versus against you. And then we just think that when it comes to multifamily and commercial real estate, it's a hedge against inflation. Everything's gone up, right? The only thing that hasn't gone up is people's incomes. But for sure, everything has gone up, and it's a better hedge over a 5, 10, 15-year period of time compared to the stock market, because it's a hard asset that's producing income on a monthly basis.
Now, we're going to go over each one of these things in a little bit more detail as we go on, but this just gives you an overview of like really what's possible with multifamily investing. Marty, did you have something you wanted to add?
When I look at this, what sticks out with me, guys, is there's 4 or 5 ways you make money for every dollar that you put into real estate. Without even talking about the whole leverage piece here, compare that to the stock market. Now, I'm not going to rip on the stock market too much because money can be made, but you only make money one way. It's when you sell it for more than what you bought it for, and even then you pay a lot of taxes on it. So rather than making it maybe one way, how about making it 4 or 5 ways? With the tax benefits and everything else. Again, you just want to compare the two investment strategies. That's why I love real estate.
Yeah, I mean, long-term wealth is just really this. They're all working on some kind of model where they're buying existing cash flow, they're growing that equity because the tenants are paying down the debt, the appreciation's happening naturally, and they're also doing what's known as forced appreciation by improving the value of the property. And then when they refinance, they pull that cash out and they're moving it into another performing asset, and they just keep on repeating that process over and over again.
Oh, let me add. Sorry, and were you done?
Yes.
Okay, sorry. I want you to think about this too. When I saw this slide, one of the things, so two of the things that we really focus on in our community is really, one, help you increase your income, but two, grow your net worth. One of the things we realize in working with the general public, we've been in direct sales for 20 years, is that most people do not have their attention on growing their net worth. And so they're very short-sighted in their income goals. And usually the only focus is on income. But if you notice, if you can look back on your own life, 5, 10, 15 years, You may have grown your income every year, but did you grow your net worth? Do you even have your eye on growing your net worth? Take you back to the days of playing Monopoly. Remember, it was all about acquiring real estate. And you were acquiring real estate because every time someone landed on your property, you got paid passively. And I want you to think about that. You thought that was a game as a kid, but that really is how life works. But you've not been in a place where you've learned how to make it work for you.
Absolutely. So let's talk about a little bit what's going on as far as, industry wise, right? So but let's compare just stock market. Marty touched on it a little bit. Stocks have a lot of risk, high volatility, bonds, low risk, low returns, single family homes, medium risk, small returns, multifamily, low to medium volatility because it's in such high demand. The income is passively high, and then you've got incredible tax benefits, and you have a lot of control. So you can minimize and control your risk better than anything else. Now, let's look at the market status, what's going on. We had a peak supply for multifamily in 23 and 24, just coming on the backside of COVID, right? And right now, there's incredibly strong demand. I mean, this is a resilient sector. Renter demand is just completely, off the charts of what's going on, which means we have strong occupancy because there is a lot of housing that has not been built yet because we went into about a 2-year moratorium during COVID, which slowed down construction. So population increased, incomes didn't really increase, but construction dropped. So there's not been enough new construction. So things are in high demand, but there's consistent modest growth depending on what city you're in or what sub-city you might be in pertaining to your market. And again, you don't have to be an expert on all this. This is why you're a part of a community to get these insight details and the data. But on the occupancy rates and what it means as far as on the opportunity, these are data resources out there that are kind of pointing to how strong the sector is. All of it's in the low to mid 90s, which is incredible because that means you're able to park capital in these assets and they're stable, they're occupied. But why is there a window of opportunity if everything is open and if everything is stable?
I was talking to someone earlier and they had been involved in real estate investing, but all single family homes. And why occupancy rate is so important is if you have let's say a 20 unit complex, a very small complex, it's 95% occupied. That means only one person is not renting in your 20 unit facility, even less than one person. Versus if you had a single family home and you had a tenant move out, you are rentless. You have no income until you renovate that house, you get it back ready to rent, you put it on the market, you find a renter, and then it could be months where you're at 0% income during that time. That's why occupancy rates and having these high occupancy rates is such a big deal, especially in this sector right now.
I absolutely love this quote from Warren Buffett because there's another one that he has that leads up to this. And so when the economy, think of the economy when it's good, high tide, right? People are in the water, they're swimming around, and then the economy starts to get constrained, and then it becomes low tide. Well, when it becomes low tide, you're going to find out who's been swimming naked, right? People that were taking chances and risks. So not too long ago, about a year ago, someone asked Warren Buffett at one of his Berkshire Hathaway investor meetings, and they said, aren't you concerned about real estate? How is it going to do? How is it going to, last and, continue to grow with all of these, interest rates and constraints going on? And he simply just said, real estate's going to be fine. It's just going to have new owners. The land's still going to be there. The building's still going to be there. The tenants are still going to be there paying rents because they need a place to live. But the owners that have been swimming naked, taking chances, those ones are going to get replaced. And that is the season that we're moving into right now that we have not seen in 25 to maybe even 30 years, where properties can be purchased at a discount or at construction costs potentially. So there's just a lot of opportunity that's starting to open up because banks are putting pressures on owners to get off their books because they have been carrying them for so long. There's a term that you may hear if you stick around. Banks have been extending and pretending for a while because I'm going to let Mary cover this next section because as a former engineer, she loves graphs and she loves numbers.
I do love graphs. So this graph is a snippet of the history of mortgage rates. So we just took the snippet for the last 4 years. And if you look, and this is from Freddie Mac, credible source. So if you look from 2021 to 2022, it was steady at 3%. And that's what people were experiencing, which it was a great time for a lot of people to buy, and they were hedging on that. But if you notice, in 1 year from 2022 to 2023, in 1 year, mortgage rates more than doubled from 3% to 7%. And so when a lot of these operators on interest-only loans, their loan payments, because their interest rate doubled, their loan payments doubled. So imagine if your mortgage or your own personal rent doubled within a year. It wasn't like it doubled in overnight. It just slowly went up month after month after month. And imagine 12 months ago, it was half of what it is today, or 12 months from now, it's double what it is. And for a lot of operators, they knew like it ebbs and flows and ebbs and flows, and they were hoping and banking on the rates going down. But what happened for the next 2 years, it held pretty steady at 7%. It went up again a little, down a little, up a little, down a little, but it's been hovering at 7%. So imagine paying double for 2 solid years. It definitely wasn't what a lot of these operators were expecting. And so when mortgages double, then operators start to pay slow if they weren't planning, if they were swimming naked, right? Then they start to get behind on payments. And when operators get behind on payments, the banks start to press them. And when the banks start to press them, those owners start to panic. And so if they don't see an end in sight, and so a lot of these owners are going to be in a place where they're going to be forced to sell at a price point that they really didn't want to sell at.
No, absolutely. So we are definitely in low tide, and there is an abundance of supply that's coming on the market because this is just the ones that have happened in the past couple of years. We have another round happening in 26 and 27. There's things that are just not being talked about in the headlines with the talking heads on the news, but we've got a almost $1.5 trillion debt on revolving credit card debt for consumers. There is an all-time high on corporate debt, and then the commercial real estate debt also that is maturing and resetting at these higher interest rates. So we have got a window that just has not existed in the history of our country with all these sectors combined. So let's talk about traditional ways of people that would invest in real estate, mostly let's say commercial. You could go in as a sole owner, get some knowledge, put some cash together, buy something, you're in the driver's seat. You control everything. The buck stops with you. You got all the responsibility and you got all the rewards. Then there's joint venture where you partner with some people. You guys pull money together, you guys are all partners and you take down a property, whatever that might be. Now, if you think about it, a small commercial property could be $1 million purchase, right? You're going to get banks to finance on that. Maybe you get a bank that does 70 or 80% loan to the purchase price on that. That means you still got to bring 200 to 300,000 to the table. So if that's something that is not an option for you or your peer group or network, then joint venturing becomes a little bit more challenging. And then you've got people that are sponsoring investment opportunities for a property. Maybe it's a 200 unit property and they're bringing in investors known as limited partners. Problem with this is only 13% of the population actually qualifies to be what's known as accredited investor. And those are set by the SEC. And the SEC pretty much just says you're either making $200,000 a year individually for the past couple of years, or you're married and you're making $300,000 a year for the past couple of years and should continue, or you are a millionaire minus your equity in your primary residence. So that limits it to about 13% of the population, which means what does the 87% of the population do? Well, for a number of years, they could do nothing in the private market. It just wasn't available. They had to go with what we call retail, meaning Wall Street, public traded type funds, not privately held funds. And I have been in the world of private funds. I've had 2 funds. We've done over $45 million in transactions over the years, all inside of real estate and all inside of finance. And I did all of that with accredited investors people that were considered to be high net worth, and the SEC said they're allowed to take this kind of risk. Well, I wanted to have something different on this go round. We wanted to create something where the everyday person could have fractional ownership into the same type of wealth building models that the wealthy have had access to for decades. Now, since the Jobs Act was passed in 2012, it has opened up a world of crowdfunding. We've gone through the painstaking process and employed all of the Securities Council and the financial institutions to create this type of portal for our fund that we're doing. And basically, maybe you've heard the term fractional ownership, maybe you haven't. Maybe you've heard of crowdfunding, and the only thing you know about crowdfunding is GoFundMe. Well, that is a form of crowdfunding, but that's a donation based. When you're looking at participating, investing through a crowdfund, you are entering in as an investor and you are getting ownership of some capacity in that asset. What we created was a diversified fund. So anything that the fund acquires, your risk is spread across that entire asset base of that. And the things that we focus on to create this passive turnkey solution for you is we focus on multifamily, assisted living, storage, flex space, RV parks, student housing, things that are in high demand, regardless of what generation we're talking about. Because right now, millennials are struggling. They can't own. Everything's gone too much. Housing is doubled. Their incomes are not starting off double. They are moderately growing at best. Then we've got Gen Xers trying to exit their houses. Then we've got baby boomers that are looking to downsize. And so we've got a dynamic with three generations that we've never seen before. So it is creating a lot of opportunity to help a lot of people, but also yourself too, because you can find a way to start incrementally in small bite-sized chunks, being able to get fractional ownership. Imagine having 1% ownership of each one of these asset classes through a diversified fund. I mean, this is what creates a whole world of opportunity, because even if where you live, let's say you don't want to invest where you live. You live in an area it's too expensive and you can't jump into that market, or you live in an area where it's like it's not growing enough. I don't really want to be in this market. Bottom line is, with today's day and age, with the technology that we have available, you can have fractional ownership and own real estate anywhere. So maybe you can't own where you live, but you can own somewhere, and maybe you can own at a smaller price point that is not otherwise offered. Now, there are some crowdfund platforms out there, and what they do is they allow you to go into one property, one asset. If you remember the scenario that Mary talked about, on if you own a residential property and you have one tenant, when that tenant moves out, you've got 100% risk. You've got 100% vacancy. When you invest on a crowdfund and it only goes into one asset versus a diversified asset class, then you've got 100% risk. Versus, hey, I put $1,000 in and now it's spread out over 5 properties. It's not spread out over just one.
Yeah, this is actually a way for everyday people to invest the way the wealthy invest. So some of you may have heard the term private equity. And so the wealthy pull their money together into a fund and then they diversify their investments so that it's not all in one place. And up to this point, everyday people couldn't do that because you were not an accredited investor. You couldn't invest into a fund like that. So getting involved in a diversified crowd fund gives you that type of ability to have that kind of investment without having to invest the tens of thousands of dollars.
Absolutely. And, we're not asking you to make an investment. I just want you to understand that there's a vehicle out there that could meet you where you are today if you're wanting to get in the game sooner than later. And so, again, we're going to give you a little bit more background on some of the things that pertain inside of the multifamily market. So you have just some general knowledge, because as you're driving around, you're going to start seeing different types of properties and you're going to start going, I wonder what kind of property that is. I wonder what kind of asset class that is. What's the rating on that property? So just kind of give you a ballpark, and some of you may want to take a screenshot of this. But a class A property is something that's, pretty new. It's about 15 years old or less. It's just got built, or it's about 15 years old. It's new, it's luxury, it's got, the amenities, pickleball court, pool, you name it, right? And that is a portion of the market that's being built. But that market slowed down because we had a 2-year construction halt, which has really pushed the opportunity with the Class B and Class C properties. And these are properties these are good properties. This is where middle America lives. This is where people raise their families, hardworking people. Maybe some people are going through a transition, but these properties range from 15 to 50 years old. These are good properties and they're going to be around a while, and they're good returns. They've outperformed annually over A for a long time now. And then D, we don't promote D class properties. They are harder markets. They require a very experienced person. There's a lot of risk. There's a lot of reward there. But I would say that it takes a special type of investor to really want to dive into that. So we focus on B and C. Now, understanding the language of the industry in multifamily real estate is key because the numbers tell the whole story. We lived in Japan for 18 months. When we got there, we didn't know any Japanese. It was very difficult. We had tutors. It was still
Statement.
We had tutors. It was still very difficult. More difficult for me, apparently. Thank God for Google Translate. But once you started to learn how to order food, where's the bathroom, you could start to survive, right? It wasn't so overwhelming. It's the same thing with this. You're learning the language of multifamily or real estate investing, and probably for most of you, after just this session alone, you're about in a 2% category of all people you probably already know. Because most people have no idea, because we don't get taught this in school, and the only way you find it is by really personally seeking it out, or by accident you stumble across a mentor and they decide to help you.
Now, some of y'all, when you saw numbers tell the story, you checked out because you're like, math's not my forte. I don't do math. Listen, check back in. We're going to walk you through the process. You don't have to eat the whole elephant in one bite. Okay, we're just going to give you some bite-sized pieces to give you something to think about, because remember, this is intro to real estate investing. This isn't real estate investing in its entirety. So just stay with us and just see if you can follow along. You don't have to fully understand, but just see if you can follow along the process.
Yeah, we don't need to get you an MBA in 1 hour. But this is a real key terminology, net operating income, known as NOI. I want to show you the power of NOI, and I'm going to have Marty chime in here in a little bit. But really, NOI is the total income coming into a property minus the operating expenses. That gives you the NOI, which is going to help you figure out, what's this property worth? What's it actually going to make me? And I'm going to talk a little bit about a case study here on someone who bought a 6-unit multifamily in San Antonio, Texas. They bought it for $720,000. Their NOI, their net operating income, was about $46,000. Cap rate, we're not going to get into, but it's just the way that they calculate how to come up with the value of the property. They put a down payment of 20%, $144,000. Now, you could do that with a group or you could do that individually. So they got a loan for $576,000 at a 7.5% interest rate fixed. Very important, for 30 years. Now, they went in with a value add strategy because they wanted to increase the value of this property in a reasonable amount of time. So they were renting these units for about $850 a month. That's pretty modest. They put in another $60,000 into light renovations, about $10,000 a unit, and they upgraded some things. Then they were allowed to re-rent those at $1,050 a month. Now, what that actually does to this, the financial impact is, before they were collecting $5,100 a month. Now they're collecting $6,300 a month. They have dramatically increased their ability of what they can earn on a monthly basis and an annual basis. So the annual net operating income increase after their operating expenses grew by 54%. Now, what does that mean? Well, based upon this cap rate, which is pretty modest, they were able to increase the value of that property, basically create equity in that property of over $221,000. You cannot do that with a piece of residential real estate. You can only do that with this type of property, this type of scenario. And this is a very small situation, because what if this was 10 units, 20 units? How much would that have increased that equity value running the same formula and the same model? Marty, you want to chime in here?
Yeah. a lot of numbers there, guys, but I'm going to make it real simple. They increased the value of what that place was worth by just 1,200 a month. And that 1,200 a month is 14,000 a year. If you divide that by the cap rate, the very last line is all you need to know. The 14,400 divided by the cap rate, they increased the value of that by 221,000. I mean, that's a year's salary for us. We'd be happy with that, right? When we, and I don't want to get into the weeds too much, but if you were to do some remodels, say spend $10,000, but that $10,000 generated that one-time spend generated 14,000 for the year and increased the value $221,000. That'd be money pretty well spent. So you understand the power in increasing the value, increasing the income, and you'll get this either when you refinance or when you cash out. But it's something that you control. This is forced appreciation 101.
Yeah, throw in the chat who remembers how much they actually invested on the renovations to increase the value $221,000. It's a pretty darn good return.
The stock market is not going to deliver you that. I want to pull this because a picture paints 1,000 words. I mean, this kind of gives you a little bit different visual. I mean, look at what happened. This is the same scenario. So, 60,000 in light renovations, turn that property into an increased value of $221,000. That's a 30% increase in a very short amount of time. And on top of that, they can now access that 221,000, a percentage of it, and tax-free, and go ahead and put that into another property and continue increasing their cash flow. Now, just think about this, because we don't want to overwhelm you, but we do want to give you value. Simple exercise, just think about it, is how many units would you need to become job optional? Some of you want to be job optional soon. Some of you want to be job optional in 5 years or 10 years. One of the myths, and after spending the past 20 years inside of direct sales, that I've always had to help people kind of unbrainwash themselves on it is when you retire, you don't have to make less money. You don't have to downgrade your lifestyle just because you retire. You can continue to increase your earning potential be in your retirement years. There is more people that are in their 50s, 60s, and 70s that are starting to invest in real estate that have ever done before. And now the great thing is that now we're bringing in a new generation, the 30 somethings that are coming in. Even some of the late 20 somethings are coming in because they are realizing that real estate is always going to be in their future in one way, shape, or another. They just need to figure out a way how to start getting paid from it. So start thinking, gosh, $200 a month per unit that I was getting in cash flow. How many units do I need to become job optional to where I am not worried about if I lose my job, if the economy does something wacky and crazy, what would give me that foundation, that cushion that I could continue to build my portfolio on? Because there's a starting point for everyone. It's important to think about it. So we're giving you permission to dream again. Now, what I'm going to do here, because we've covered a lot, take a picture of this QR code. This is a multifamily calculator. We're not going to go to all the inner workings of this calculator right now, but I want you to know this is something that we have built. It's still in a beta format, but it's open to you guys. And you can go ahead and start playing with these numbers. It's got little slide bars. It's completely interactive. I have to bring it up. I'm sorry. I'm just going to bring.
We're running out of time.
We are running out of time. Don't tell me that.
And
I
then
can't pull
someone's
it
gonna
up.
drop it in the chat in a minute here. Hold on a second.
Okay, we're dropping the link in the chat also. But bottom line is you're able to, yep. You're able to play with this, right? And this is only going to be downloaded to you. We're not going to see anything, so don't worry about any of that. But you can just play with these and it'll let you know if it's overpriced, good deal, kind of like a red light, green light. It is basic in nature. But for those of you that are kind of curious, how many doors do I need? This is a great exercise to run through. So I would just encourage you to really go ahead and bring back the slides. I would just encourage you to use that as part of what you're dreaming with, right? Because it is a working model that can give you a vision or a perspective of what is possible. Now, you don't have to know everything. You don't have to figure it all out right now today, right? We didn't know everything 20 some odd years ago when we got started on this journey. You just need a plan and the commitment to follow it. And the best way to do that is really inside of a community, because that's where you get to lock arms with people. And so with our community, we cover a whole host of things, whether it's real estate investing, financial confidence for your personal finances, tax and entity formation, business operations, capital raising. We go into a lot of different things, and you're also in a unified chat too, because life throws you curveballs. It'd be nice if you could bounce those curveballs off people who have had experience with that issue. But we cover all of this inside of our community, and we keep you up to date with what's happening in the market and making sure you're getting your skills sharpened. And then everything's on demand as well, because all of those recordings, they go in here, and you can watch them at your leisure, rewatch them, watch them in 15-minute bite-sized chunks, and start sharpening your skills and understanding how you can start getting in the game of real estate investing. So I want to bring up Tony and Catherine Bass, and it's really critical when we talk about taxes and we talk about real estate investing. Um, you know, they go hand in hand. But for some of you that aren't in real estate investing now, it's like maybe you need to just, if you don't have a small home business of any sorts, I want you to understand how quickly you could start accessing a portion of the tax code that you maybe not accessing right now. And I want you to hear from some tax professionals, not me who plays one on TV sometimes, and really hear it from them on some of their insights of what you guys could be taking advantage of now for 2025 and how you can set yourself up for 2026.
Awesome. Thank you guys. Thanks again for having us. And definitely thank you, Mary and Richard, just for this opportunity to be able to invest in those things that all of us have always wanted to do, but we've never had that opportunity. So thank you for sharing that. Because something that Mary said a little while ago, it's all about building your net worth. So if you're around us for any amount of time, we always say it doesn't matter how much you make, it matters how much you keep. So we're always looking for different ways of what taxes, strategies can we use to put more money in our pockets. So I think you guys just introduced us to a great platform that allows us to do that and maybe use that money to make it grow in something like Investor Nextdoor Club.
So this presentation is kind of short, kind of more of an overview, and we kind of want to focus on the mindset that Mary and Richard talked about, Marty talked about, the mindset. But before we get to that, a few disclaimers. The views in this presentation are not those of the Investor Nextdoor Club. They strictly belong to PFL Tax Service. That's very, very important. The information that we present is for educational purposes only. A deep dive for your individual situation is way more necessary than just this overview of what we're talking about. And then this last one is very important to us. Catherine and I have dealt a lot with tax problems as far as helping people get out of tax trouble. So a lot of what we say and a lot of what we do is shaped around the end result. We want to keep you out of the end bad result and keep you clean all the way through and take advantage of the tax code to its fullest extent. So that being said, here we go. This quote right here is one of my favorites. This guy's a judge who understood the average American person. Whether you see this or not, or whether people tell you this or not, in America, there are two tax systems. There's one for the informed, one for the uninformed. Both are legal. The only difference between the wealthy and those of us who are not quite there a lot of times is they have knowledge of the system and we don't. And that's where Catherine and I like to kind of fill in the gap.
And one thing I love, Anthony and I are definitely that fighters for the underdog. So again, whenever we heard about Investor Nextdoor Club, that was like perfect because it is definitely created for the underdog. So things that we like to talk about is that just mindset shift. What do we mean by that? It's not, don't ask yourself, is this tax deductible? Ask yourself, how can I make this tax deductible? So everything that Mary and Richard and Marty are sharing with you guys today, we just ask, look for ways in there. It's like, hey, how can I use that for my an advantage, right? So how can I save in taxes? What can I do with this or that? And then just understanding how having a home-based business, I know that they didn't talk about that a lot today, but there is an affiliate program that's associated with this. So how can I use that to my advantage? How can I create tax savings because of that? And then what does that have to do with wealth? Well, there's so many things kind of going back to building your net worth. It just starts $1 at a time. How can I put one more dollar in my pocket so that I'm able to invest maybe in that piece of property that I'd never had that opportunity before? And then as a bonus to you guys, we did create an ebook that you guys will be able to download that'll talk a little more in detail because we are keeping this kind of basic today. But it'll give you some other ideas to think about of how I can create those tax savings in my home.
So as we get started, again, remember it's all about mindset. Here's some things to help kind of power your perspective. As that other slide said about the two different tax systems, kind of understand that the tax code is written to encourage and reward certain behaviors. If you do what the government kind of likes, such as provide multifamily housing, provide certain things for people that are in need, then you get rewarded. If you don't, let's say that you just go to a job, it's not that you don't get rewarded or you get punished, but you don't get to get the same benefits as the people who did do something about that kind of stuff. Owning a business and investing in real estate are great examples of those behaviors because a business typically is going to help people work, feed the economy. Small business runs our economy. And when you happen to be a home-based business, you are a small business, even if you don't have any employees. So very, very important to understand that concept. And then the real estate side of it, again, you're providing housing. And the range is huge. You've heard Richard talk about multifamily housing, student housing, things like assisted living centers. So the housing side of it is very, very important. And as they said earlier, if you choose to be an employee, that's great. We've all been employees or we all are employees type thing, but just understand that there's limited options. The tax code is not designed to reward the employee. It's designed to reward those who go out and take a little bit of risk, those who invest and do things that further our nation. So powerful wealth building opportunities with that. Good news. The good news is it's your choice. You can do one or the other, or you can do both. We were employees for most of our lives. Quite a bit of our adult lives, we were employees. We shifted over to the entrepreneurial side once we retired. And that was when our eyes got truly open to what's available out there. And for us, we can't go back the other way. That's just us.
And it was kind of funny. I mean, whenever we started doing taxes and really diving deep, like I told Anthony, I'm like, okay, I'm tired of making everyone else wealthy by being that employee. It's like, what can we do for ourselves so that we can build our net worth and do something bigger with our life?
So a great example of what we've just been talking about is the Investor Nextdoor Club. When we heard about this, and just in all transparency, we're fairly new to this club. Beautiful thing, because when we first heard about it, we thought, hey, that's what we've been waiting for. That's exactly what we've been waiting for. And so it gives us the opportunity to invest in commercial property, which is what we want to do. Do not have all the knowledge we need, don't have the resources that we need, but this platform does. And then the other part is, how do we do this as a business? Because we have a rule in our household. If money is going out, we need to figure out a way to make it come back to us. And if it comes back to us and it's multiplied, that's way better than if it just comes back to us. So we use multiple strategies to do that. Part of it's the tax code, part of it's the investment strategies. Yep. So that being said, here's 5 daily expenses that may be tax deductible for you. And this is just a light overview. These are things that we do every day. Every day we need food. How about you take that food that you're going to eat and make it tax deductible, meaning it reduces your taxes? How do you do that? You have your meals based on a business purpose. So we met Richard and Mary a few weeks ago. We had dinner. And I'm kind of being silly when I say this, but dinner tastes a heck of a whole lot better when you know a tax deduction's coming after it. Tastes a whole lot better. People tease me. They say, why do you eat ice cream when you travel all the time? Because you don't eat it at home. Well, I eat it when I travel because that travel's tax deductible and that meal's tax deductible. So I paid half price for that ice cream. Tastes a whole lot better. So, so that's the food side of it. Anything you want to add here?
No, well, it just made me think because, Marty even mentioned, it's like, well, buy a limousine, turn that into a business. So always looking for different ways to keep more money in your pocket.
The next one is your house or apartment. We love, love, love the home office. And even if you have an office outside of the home, it doesn't eliminate you from having a home office as well. We can show you what that strategy looks like because it's very important. A lot of times people have a home and they're told that they can deduct the mortgage interest because they have a home, but their mortgage interest doesn't rise to the level that it needs to deduct it. Well, if you're using it as a home-based business, you can deduct the mortgage interest and quite a few other things off of your taxes based on the parts you use for your business. Very, very, very important strategy.
And I just have to tease my husband because he does love candy. So whenever I buy candy, I don't buy it for our house. I buy it for our home office. Again, making that tax deductible.
The third item is a car or transportation. You may not have a car, but you may use Uber. If you're using that transportation or that car for business related purposes, it's a beautiful thing because the car has personal aspects to it and it has business aspects to it. So let's go back to us having dinner with Richard and Mary that night. The drive to the restaurant was tax deductible in our personal car. The meal was tax deductible because it was business related. The drive home was tax deductible because we just came home from a business related meal. So throughout that whole evening, we saved on taxes. Now understand, we didn't go and make money at this meeting, but by saving in taxes, we actually did make money because we kept more of our money in our pocket.
And it was something we were going to do anyway.
Exactly. They're wonderful people. So
we could do it again.
Yeah, we're ready to do it again. And everybody has a cell phone for multiple reasons, but a cell phone is a great tax deduction. You're going to use it whether you're in business or not. Why not slide it over to a legitimate business category and get a tax deduction for it? That one's huge because everybody has that. And the last one we'll kind of cover is a personal computer or tablet. Some people use their cell phone as their personal computer / tablet. Some people have separate. I'm an old dinosaur. I like desktop computers and I still have the towers. I enjoy that. But when we buy a desktop computer, it is for business purposes, at least 80% of the use. So we get to subtract that off of the income that we make, and any of the programs that we put on there for business become tax deductible as well. So here's, and I want to turn this back to Catherine in a second, but here's 5 things that we all pretty much interact with every day. The difference between most of us is some of us use them in our business and get a tax benefit and money back for it. Others just have the expense going out of their budget and never see it again. Huge, huge difference. In America, there's 2 tax systems, one for the informed, one for the uninformed. Both are legal.
Yes, I just want to encourage everyone, like I said, if you're even remotely thinking about Investor Nextdoor Club and maybe the affiliate program, it doesn't mean that you have to start making money to use these tax deductions. It could literally start today. Maybe the tablet or whatever phone that you're watching this presentation on. It's like, well, today I'm intending to investigate this business opportunity. So I can start today deducting certain things that I'm using. Maybe if you drive to a meeting today, whatever the case may be, but start thinking about things like that, because maybe you're not actually making money till 2025. That does not mean that you cannot start using these deductions in 2024 going forward.
Or you mean 2025 and 2026?
Yeah, that thing. Whatever you're.
So how do you take advantage of all of this? Start a business. Can be a side gig, can be your main focus. It can be both. We love the idea of both because one lets you do a transition to the other. And although the Investor Nextdoor Club is about investing, there's a side of it that gives you the ability to open a business and treat it like a business and get the corresponding deductions. So kind of with that in mind, we don't know of any other platform in this space that does that. Not just, we don't know if there's one out there, but this is the only one we've seen. And to say that we got super excited about it, we've been waiting for this for years. And Richard and Mary didn't know that before they met us, but we've been waiting for something like this for years. Bring it to our level.
Yeah, and think about it. The wealthy always say a minimum of 7 streams of income. So even if you're already doing something, make this one of your 7, 8, 9, or 10 streams of income, because each one of those businesses get different tax deductions. So creating your whole life around that to keep that one more dollar in your pocket.
And as was mentioned earlier about Robert Kiyosaki, one of the things we love about his advice is it is advice that will make you wealthy. And when we mentioned the part about wealth in the beginning of this presentation, what we were talking about was this quote: real estate investing, even on a small scale, remains a tried and true means of building an individual's cash flow and wealth. We consider money green energy, and that green energy can flow to you or it can flow away from you. As long as you keep the green energy flowing towards you, you're winning. And real estate is one of those ways to do it. So we're happy to be on board with it for sure.
Yeah, so let's go back to that mindset. Everything is about mindset. How can I make this tax deductible instead of is this tax deductible? And empowering yourself with that knowledge can be just a total game changer. Using the power of the tax code, I love this one because I think a lot of people get, I guess, scared of the tax code. They're like, that's a scary thing. But whenever you realize that the tax code is actually written mainly for entrepreneurs, it's like there's very few things that are in there that saying you can't do, but there's a lot of things in there that says you can do. And so it's important to know that and just totally turning your life around where you get to keep more of that instead of giving it to the IRS. And I love this whole build your future now, because Mary said something a few days ago, and I don't even know if she realized that I heard it, but she said, be the person today that you needed 5 years ago. And, so whenever you're thinking about taxes and how can I make that mind shift, who do I need to be, start right now? Because in 10 years from now, I need to be that person. I need to, because all of this has the potential of growing big. So what do I need to do in those baby steps to create that tax savvy mindset? So whenever, we're all sitting around, celebrating 5 years from now, because we're all so happy that we joined, we were part of this opportunity. Well, we're all super happy because now we get to keep that because we started, creating that tax savvy mindset, and we get to invest in bigger and better things also.
Absolutely. And being in the tax world, we do numbers all the time, but I promised that I wouldn't really do numbers in this presentation, but I'm going to bring up one number because Catherine already said it, but the tax code, you all, the part that says what you have to pay is less than 1% of the tax code. The rest of the tax code is designed around what you don't have to pay. So less than 1% of the stuff you have to pay on, this income, that income, things like that. Over 99%, and I guess that's two numbers, sorry. But over 99% about what you don't have to pay. So kind of let that sink in as you think about harnessing the power of the tax code, as you think about starting a business, as you think about starting a business specifically as an Investor Nextdoor Club affiliate, where you're also doing the investment fund. Do something in 2025 as it comes to a close that you'll thank yourself for in 2026.
Yeah, and I'll say something that might be a little controversial, so you guys might never ask me to come back here again. But, just like GoFundMe, it's not a retirement account.
No.
You said, that's a donation platform. Well, a tax refund is not necessarily a savings account either. It's like, what can you do with that money that you're letting the IRS use all year by just being a little more tax savvy and keeping it in your pocket and you using it for your benefit all year?
Can you put it in your investment and Investor Nextdoor Club?
Yes, you can.
Okay. Well, as we come to a close, as Catherine promised you, there's an ebook that you can use this QR code. I'll leave it up there for just a few seconds. You can use this QR code to download the ebook that was made specifically for this group, for this event. And if you have questions, you can also reach out to us from there.
Yeah, so
Can
hopefully
you guys drop that link after you get off in the chat so that if those that are on computer and they're not able to scan it, or those that are on their phone, they can't scan it, they can just click the link?
Absolutely.
Absolutely.
Yeah.
Absolutely. And something Catherine and I talked about just a little while ago, knowledge is power, but knowledge that goes unused is not power at all. It's just knowledge. So we hope that you all got something out of this short presentation. We hope that you've gotten a lot out of the rest of the presentation because it is way, way powerful. So we encourage you all to do something today that you'll be happy for tomorrow.
Yeah.
But
Yeah, that was awesome, guys.
Thank you.
One of the things that we learned from Anthony and Catherine the other day, they were talking about adding things, like if you're making a trip, add something else that you can write off that trip. Well, our son started a new school. It's 22 miles away from our house.
Oh.
That's 22 miles there, 22 miles back, 5 days a week. And it's $300 in tolls. That's 900 miles. And so what I started doing was tacking on some business meetings on that side of town. So now I can legitimately write off the miles and write off the tolls. And so there's a lot of people that they just eat that. They don't understand how to utilize that. So one of the reasons why one of our pillars is tax and entity formation, because that is super important in wealth building.
A little bit of knowledge can save you thousands of dollars a year. A little bit more knowledge can make you hundreds to millions of dollars a year. So you can only save so much. You're not going to save yourself to save your way to financial freedom, but you can certainly learn some things that are going to increase your income making ability that get you there a whole lot quicker.
All right, one more thing that we wanted to share with you guys is this net worth calculator and cash flow calculator. So there's two things on this page. So you can calculate what your current net worth is right now. If you don't have your eye on that to build year after year, you need to put your eye on that. That is a metric that you have got to start gauging, because that's what the wealthy do. If you want to be wealthy, you've got to do what the wealthy do. And then the other one is a cash flow calculator. And so there's 2 tabs for that, and you can download them both into an Excel spreadsheet. So I don't know if there's someone on our team that can put the link in there, but I don't have the link handy. So if someone can put the link in the chat, that'd be awesome.
This is 100% confidential and private. When you fill it out and you go to email your or download the Excel file, it just goes to you. No one else sees it. It doesn't stay on our servers. None of this. It's completely private and confidential. It's still a beta version, so we always welcome feedback. But I think this will be a really great starting point for someone who has really not had their eye on this.
Now, one of the things that we absolutely love, that why we have Investor Nextdoor Club, is really the power of community. We've brought together, and we have in our community, some really great people. You've met some of the people in our community. And with that knowledge, it's just iron sharpening iron. You're just going to get better. And so I want to bring on somebody else in our community that is also one of our trainers and advisors. I just want her to share a little bit about her background and what brought her into real estate investing. Those of you who are in our community already, those of you who are going to be joining us, you're going to see more of Carly as she does some training and advising on multifamily real estate and some other real estate as well.
Absolutely. Give us a little bit of your origin story, because you entered into the space not too long ago.
Yeah, oh boy. I always love giving my story. I feel like it's like kind of the same every time, but we'll try to spice it up a little bit. So I was in the fitness industry from 18 to 26, like 26 in 2020, around there, around there. I'd maybe just turned 26. So I was managing a gym over by Yale University, and then COVID hit and the gym shut down due to it being more student-based gym, and obviously it was the law, every gym, needed to shut down. So I ended up finding my way into real estate a few weeks later and got licensed in about probably 7 or 8 weeks, and then fell into the investment side right off the bat. So I came in thinking I was going to be, showing houses all weekend and running around with buyers for endless hours. And that is the complete opposite of what actually ended up happening. So my first week of being licensed, I had 2 deals under contract with wholesalers and investors for flips. And that was actually one of my first $1 million rehabs that my client sold about a year later. It took him a very long time to get permits passed and stuff. And then from there, I just started networking in the off-market space between in-state and out-of-state investors and wholesalers, and really learning that side of the business. And then about a year and a half in, I became a managing partner for an investment brokerage in Connecticut, and did all of their companies buying and selling from an agent perspective, and then started lending money into those deals to become a partner in those deals, as well as the agent on the transactional side of things. And shortly after that, my business partner and I, he was one of the owners of the company that I was a managing partner for, and we decided to create a debt fund. And said in that meeting, instead of creating a debt fund, we ended up going under contract on a 36 unit in Oklahoma. And that was my first ever investment, which was probably it's a little aggressive, but it was just such a good deal. And it was something that we could not pass up. It was a deal of a lifetime. And so we purchased that about 2 years ago. And that first 12 months, we bought about 100 doors. And then this past year, we really just stabilized everything, because we buy such like value add assets. So it's a lot of construction and, a lot of stabilizing. They're pretty much vacant all the time when we buy buildings and stuff. So we spent the last year doing that. And now we're focusing more on larger syndications. So we became syndicators in the past, I would say 6 months. We've really been focusing on it. As well as kind of more on the educational side. That's like kind of a a brief gist of me and what I do for
It's a
for the
lot in
most
five,
part.
it's a lot, it's a lot in 5 years. And she said a lot
Yeah.
of things there. If you remember, we touched on some of those terms and topics. But just know, one of the things I don't know if I'm going to quote you right on this, Carly. What is the phrase? You're one.
One deal away from changing your whole life. Something like that you said before.
Yes, yes. I think on the first one I did say something like one deal can change your entire life.
And it,
And it really can.
And it does.
And Carly had a lot of terminology in what she said, and some of y'all are like, I don't understand any of it, and that's okay.
I need to get better at that.
The one thing I want you to gather from what Carly said was 5 years ago, she wasn't in real estate at all. Like a lot can happen in 5 years. And for a lot of you, I want you to look at your life 5 years ago. You're in the same place as you were 5 years ago, or just a little bit better. Some of you maybe a little bit worse. But my point is that we overestimate what we can do in a day because our to-do list is so long, but we really underestimate what can happen in a year. And when you're talking about real estate, especially commercial real estate, the trajectory of your life can change just like that. Just like that.
I think it's all about like taking opportunities too and like not being super fearful. And I mean, but right before real estate, I was probably making like 60, maybe 70 grand a year. Which, you know, at 25, 26 is decent. But my first year of real estate made 6 figures. And then, you know, 2 or year and a half after that, I was technically became a millionaire. So your life can really, really, really change in a very short amount of time if you just apply yourself and you take risks and uh you know, you always fail forward, but I mean, you're gonna fail. We had bumps along the road for sure. But picking the right partner to go into those endeavors with is definitely like a big part of success as well. If I went to go do that on my own, probably would have been a completely different story. But yeah, I think it's just seeing the opportunity and going after it.
So on a scale of 1 to 10, having mentors and community being a 10, right? Like versus solo being a 1. I mean, it's like, how would you rate that?
So I, by nature, tend to be more of like, I'm gonna figure it out myself kind of person. Like I just put my head down and I go. Um, I think I networked a lot my first couple years. So maybe I wasn't like working directly with those people, but it was the partnership that began this holding company. Like from that one dynamic, I'm gonna say it was, you know, it was the most important piece of the puzzle. And I think community will help you grow a lot faster. Again, I tended to be more like do it on my own. Like I would wake up every morning and I'd watch like an hour of Bigger Pockets or something to really learn the lingo. But like if you just hang around the people that are speaking the lingo and doing the things that you want to do, you're gonna pick up on it a lot faster. And then you have the support in your corner. Like if I had the mentorship 5 years ago, I couldn't even imagine where I'd be today.
Yeah, that's awesome. And that's exactly why we created Investor Nextdoor Club, because we wanted you to know that you don't have to know everything. You don't have to you don't need tens of thousands of dollars to get in the game. You just really need to have the right community, the right education, and the right opportunity.
Absolutely. So it's important. Get in the game, great associations, mentors, and environments, because all of us have excelled when we've been in strong collaborative communities because we're all here to help each other win. And, wealthy people join country clubs not because they like expensive rounds of golf, or food or whatever they've got the buffets. It's because that's where deals get done. That's where networking gets done, where people and resources are together, then opportunities get created. Because if you come across an opportunity and you don't have the resources and you don't have the right people that can help you turn that around, then you really don't have an opportunity. So that's what we do here at Investor Nextdoor Club, is making sure opportunities are actually opportunities for you. Now, our Inc. ecosystem, which is Investor Nextdoor Club ecosystem, is everything you need under one membership, right? You got a taste of what we're doing. And we probably gave you more value than I could probably pack in this 1.5 hours. And we want to be respectful of your time and adhere to things and leave a little bit of room for some of your questions to get answered that I saw, or you want to ask some of our trainer advisors. But for this, you're going to get the Inc. Academy, live trainings, live coaching and Q&A, access to the crowd fund, in-person meetups as our chapters start to open up around the country. And then there's a community chat that's always got activity going on inside of it. So you can get some real-time answers and questions to things because, again, life's going to throw you curveballs. And as you start getting in the game, you're going to have more questions. And it'd be really good if you had a place that you can go to where people actually cared about getting you a good answer. Now, if you look at other programs, and there's a lot of people on here that can attest to this, and your phones are listening right now, just so you know. If you go look at what courses are out there in the marketplace for real estate investing, those things run $10,000 to $50,000 a year, right? And so you're going to start seeing things show up in your algorithm because you're going to get on a free training of some sort, and then they're going to hit you with a high ticket program. We entered this space to make sure that everyone, everyday person could start in a manner that wasn't stressful, that didn't put them into debt, because we wanted to help people get in the game. And so what we did is we created a subscription model. It's $149 to start, then it's $99 a month thereafter. And that's founding member pricing. There's no contracts and you cancel at any time. But you got a taste of the richness and the details that we can give you that's going to open up a world of opportunities to you that may or may not exist for you right now. But I will say this, your community, the people that you're locked arms with, will determine how fast you grow. Plain and simple. I'm a pretty good pool player. I grew up playing billiards, pool, and when I played with bad people, I played worse. When I played with people that were as good as me or a little better, I played a lot better. So you're going to play to the level of the community that you're associated with. And bottom line is you want to get on this venture, you want to start sticking your toe in the water on real estate investing. Just know this, and Carly spoke to this a little bit. You are either going to pay for education or you are going to pay for mistakes. You're either going to pay for learning what you can do with the tax code, or you are going to pay the IRS. You're going to pay your uncle a lot of money, and they're never going to send you a thank you letter. So we want you to learn and grow so you can start saving more of your hard-earned dollars, which is at times in the beginning more important than you're earning more dollars. But we also want you to have an infinite ability to add more income, more cash flow to your nest egg, your household now, that you can start building your nest egg for the future.
Yeah, basically what we're going to do is we're going to help make real estate work for you. A lot of times you're busy, you don't really know how to make it work. You know you want it, but you're just not clear. And we're going to show you and fill in all the pieces, okay? And we believe this is the community you've been looking for. It's just like what Catherine and Anthony said, is that this is the community they've been looking for years. And the reason why we created this community is because it didn't exist. We knew that we wanted to create something where everyone was invited to play the game. And in our community, we're going to make real estate and investing and taxes and all that stuff, we're going to make it simple. And we are going to do it in a way that's social, where you're going to love the community. But most importantly, we're going to make it stress-free. We're going to make it fit into what you've already got. So if you love watching live, you can watch it live. If you want to watch the replays 15 minutes a day, you can do that. If you want to binge over a weekend, you can do that. You're going to find a place that's going to fit for where you are. So we just invite you, for those of you who are interested in joining our community, reach out to whoever it was that invited you onto this Zoom or this recording and ask them how you can get started with Investor Nextdoor Club. Everyone truly is invited at this table. It's going to be an incredible way for you to get into the game of commercial real estate investing. So we're going to go ahead, and any of the speakers that can stay on, we're going to answer some of these questions that were in the chat. I don't know why I couldn't have the chat open while we were doing it, so we missed a lot of the questions.
We apologize about that.
I am going to add everybody back on here who is available to, and we're going to hit the questions. So I'm not going to, okay, so we're going to go back up here. Is it okay to screenshot and post this?
Yes.
Fine.
The moment's probably already passed, but if you screenshot it, sure, absolutely. Everything's.
I think screenshot it. I asked for forgiveness, not permission.
Yeah.
So
it's for public consumption, so you're good. What else we got here?
And then Is this something we can invest in right now? I bet you that's for the crowd fund.
Yeah, so we're opening up the crowd fund by September 10th. So that'll be fully available to all of our club members. It is held as a private crowd fund, so but the answer is yes, here in the next couple of weeks, absolutely.
Before we open up the crowd fund, for those of you that are in the community, we're going to do a Zoom that's going to talk all about the crowd fund, so
Yes.
you know exactly how it works, what to expect, how you get involved, what kind of returns, the whole shebang in a lot more detail.
Remember, our mission is to make you a knowledgeable investor, right? No one's asking you to do something you're uncomfortable with.
I'm gonna let Marty take this because it's like loaded. Can you give a simple ROI for an investor? What would that be mostly? Monthly residual.
ROI is pretty simple, guys. It's your return on investment. So if you put in $10,000, how much of that are you getting back when it's all said and done? It could be over a period of time, 1 year, it could be 5 years, whatever, but it's just what return did you get back on your investment?
But there's that, I think what they're asking on this question, Marty, is like, what can you expect? I mean, it's different for every investment. And isn't it different from year to year too, depending on what the market's doing?
So it really depends. It's a little bit more nuanced than that. So you'll have a return on investment that is your monthly cash flow, which not a whole lot of assets outside of real estate pay monthly like that. But then you also get another return when you do a cash out refi and then when you sell. So there's all sorts of ways to get your money back. So it's a little bit more nuanced than that. So you have to say, is it the ROI cash on cash that that you're getting back then, or is it the ROI when the deal was bought to when it was sold? So it all depends on which ROI are you talking about.
So let me simplify it for the non-real estate investors. There's a
What you
lot of
get
ways.
back from what you put in.
Yeah, there's a lot of ways you're going to get paid on real estate. When you invest in real estate, it's not like you invest one time and you get this one return. There's like tiers of things and processes. So it's not as straightforward as if you buy a stock and this is your return on investment. It's not like that. There's a lot of great ways that you can get paid.
Correct. And keep in mind, guys, we shared it earlier. There's anywhere from 4 to 6 ways you get money from putting money into real estate. You get tax deductions, right? You get the equity build, you get the equity pay down, you can build forced appreciation, you get the monthly cash flow. So there's different ways you could cut and slice it. So it all depends on which way you want to look at it. But the short version is ROI is what you get back from what you put in.
Yeah, that's great.
Totally. And we cover a lot of this stuff in detail in our training. So again, a lot of this is new to you guys. We don't leave a stone unturned. We want you educated. What else you got here real quick?
I don't know if I understand this question. So when we determine how many doors for a particular residual, can we make that investment at funds availability? I wonder if she's talking about the crowd fund.
Yeah, we'll need more clarity on that question because I don't want to answer
So
it
if you
wrong.
can put a little bit more information in. Okay. Is $200 per door a common number? My plan is to be job optional ASAP. Realistically known, it does take time, but would love to expedite. Praying Inc. is the solution. For those of you who hadn't figured it out, Inc. stands for Investor Nextdoor Club. So, and that name is courtesy of Marty, came up with that brilliant name. So we will always attribute that to Marty.
I would say $200 is a reasonable place to be at, right? I mean, you can find more, you can find a little less. I mean, keep in mind the smaller that number is, the more risk you're taking for things going perfectly. So, we discussed in detail, especially today on one of our training calls, is coming up with your investment strategy, and that is part of it. Like, what are your targets? What are you trying to get to? And so there's a lot that goes into your investor appetite, your personal investor appetite, but it is a reasonable number, especially let's say in the Texas market, in the B and C class arena, that you could certainly say that that is a relatively modest or conservative dollar amount per unit.
Okay, another question now can we invest in particular deals available at this time as we learn more about growth? I don't know. I think it's still talking about the crowd fund.
Yeah, crowdfund will be opening up in the early part of September. We'll be presenting the opportunities there to all of our club members. They will have an opportunity to participate. um, after they get some additional information so they understand. Keep in mind that was set up to compete with what wealthy people already have access to. So you are getting the same Lamborghini that they are currently driving as far as a fund structure.
Yeah. And we could get into a lot more detail about that, but we only have so much time. But just know it's a really powerful vehicle for people, especially starting out, because you don't have that knowledge base to really work from. I think that we answered the question. We were asking more clarity. She was saying, I am asking an approximate cash flow number, let's say 50 doors monthly. So she said we answered that.
Okay.
Then upcoming live Zoom events. All of our live Zoom events right now, outside of this one, was scheduled for our community. And so we are going to add some more of these types of introduction to commercial real estate investing for the general public, because we really want to give everybody knowledge of what's happening so that they can powerfully choose if they want to participate. Like, you don't know if you want to participate if you don't have knowledge of what it is, what's even available out there. Like, it's what you don't know, you don't know. You know, when Richard said he wanted to start this company, I thought I was just going to be on the peripheral. Like, I thought I was just going to support, even though we've worked together for 20 years. But as I got involved and started learning all this information, I got really excited because I knew people need this. People need this knowledge. People need to understand this. And this might seem overwhelming for some of you. Just know you don't have to jump full force in. You don't have to go and buy a 30-unit complex. You don't have to have $100,000 right now. Start with where you're at. Just like what Catherine and Tony said, is like, take that $1 and see where you can turn that into something else. Learn how to save on your taxes and leverage the tax system so that you can make the most of it. Grab some extra dollars so that you can put into an investment vehicle. Like, you can't get where you want if you don't start where you are. And that's the whole thing. And so we just loved being here. But before we wrap up, I just wanted to give everybody a chance to add, like, whatever's that last burning thing they wanted to share before we wrap up.
Anything final for you, Marty?
I always say, guys, the hardest thing to do is to get started. Once you get started with the right community, right support, the sky's the limit, but you've got to get started. One of the things I wrote down that you said, with wisdom comes power. It might have been Anthony, I think, that said this, but it's actually, with wisdom comes potential power. It only becomes real power when you take action on it.
Absolutely.
And really, to piggyback on what Marty and Mary just got through saying, the start is the hardest part, but once you start, it actually becomes addictive. It's a game for us to outwit the IRS. And the fun part is they give you the playbook. They actually give you the playbook and say, hey, if you want to beat us at our own game, here's the 50 jillion page playbook, go for it. It became a game, and now we're kind of addicted to it. We like keeping our money. We don't like giving it to them because we all know what the government does with our money.
Yeah.
So we're hardcore about it.
Yeah, and I think
Well,
I'm sorry, Richard. You know,
no,
we
you're
have
fine. Go ahead.
about ROI, but we never consider the COI.
Yep.
What's the cost of inaction? If I
Mm.
don't do anything, kind of going back to what Mary just said, will I get any further ahead, you know, year 2, 3, or 5 from now? It's like, what
For
do
sure.
I do today?
Now is the time to take action. I will say this, that if you want more of, if you want the best of what this community can bring to you in your future right now, then go ahead and become a club member, right? Get back with that person that introduced you to this. If you don't know who that is, you can reach out to us. I'm sure we'll have other communications going out. And you may have other people that you want to share this with. Well, one of the things that we did was, those of you that share this out, there's a referral program too. So you could actually be getting your education for free, right? Tax write-off and free, all that sounds good. Go buy an ice cream, you're good, right? So we're here to have fun and help elevate what's possible for you, but we're not here to put you in debt and stress. We just want you to be part of an alive, thriving community that is making an impact, and it's just gotten started. But I'll tell you what, where we are from 3 and 6 months from now, you guys that do get started with us, you're going to look back and go, oh my gosh, you know, I wish you could have been there. 2 years from now, people are going to be looking at, oh my gosh, you got started 2 years ago. Yes, this is that kind of movement. We are breaking down barriers for everyday people to be able to compete on the same field as the wealthy.
All right, guys, we're excited. Thank you, Marty and Anthony,
Yes.
and Catherine.
You guys are the best.
We'll see you on the other side. Thank you. Y'all have a
Y'all
great day.
take care.
Bye.
Bye-bye.